Welcome everyone to the West Center Friday webinar series. Every Friday morning, we aim to bring you interviews and presentations from key business and industry experts. We bring them here to provide insights which you can implement in the day-to-day of running your startup business. One of the first and most important processes of any entrepreneurial journey is finding the right market and customer base for your startup. Without proper execution in your specific niche market, many startups will face an uphill battle of slower than anticipated growth, less value delivery, and more expensive overhead. The process is completed by research, data, and execution, but many of the lessons can only come from experience. Today, we have Chris Peacock with over 20 years in the water industry, and he will be joining us to share his experience of navigating this journey to eventually develop a market-leading product with the AQUAOSO platform. This process is difficult to teach, but capable of being learned. And we hope to download this information, Chris's pattern of thinking, which should help inspire you to navigate this critical startup stage. So Chris, I'll turn it over to you to just do a quick background on yourself, your history in the water space, your entrepreneurial experience, and then we can transition to the AQUAOSO story, and then ground rules for everyone. If you have any questions, feel free to just chat them in. If you're able to turn on your camera, turn it on. We love seeing some interaction besides just our three faces here, so feel free to do that. And at the end, we'll do an open Q&A. All right, good to see some faces pop up. So Chris, I'll turn it over to you.
Awesome, great to be here. Ben, as always, thanks for having me, listening to me yip yap about growing a business. It's always a lot of fun to kind of reminisce on how we got to where we are and forget about all of the pain along the way, because it is a painful process. So again, my name is Chris Peacock. I'm the CEO of AQUAOSO Technologies. I recognize a few of the names in the audience, so hello everybody. AQUAOSO really helps organizations understand the financial impacts of water risk on their operations. We're focused on the vertical of agriculture, and most of our customers are banks. So we sell water risk analytical tools to the banking industry as they lend money to farmers and borrowers. 70% of our revenue actually comes from banks. The rest of it comes from large growers, agricultural investors, and some real estate folks in the space. So super excited to be here talking about probably one of the most important skills to learn, which is how to find customers and how to identify the right customers. And the reason it's so important is that these skills in particular transfer to not just the customers that you're looking for on day one, but how you adjust your behaviors and your product over time with your customers. It also applies, I think, directly to the types of investors that you look for and how you engage with your employees. So I really believe that this is one of the most critical skills you can learn as an entrepreneur. So today really is about finding customer market fit. And there's a ton of books on the topic, and I would say you should read everything you can get your hand on and consume as much as you possibly can. But at the end of the day, the real secret is taking the lessons that you learn and showing up for your business, showing up for your customers, and having the right conversations. So if it's okay with everyone, I'll talk briefly about my and AQUAOSO's background and our journey to date, because there really are two journeys. There's my personal journey as the CEO founder of a startup, and then there's AQUAOSO's journey of actually building a customer base and iterating on product. Then I'll talk a bit about this concept of showing up in the context of market fit. I think that will probably be a bit more free form with some Q&A. I know, Ben, you've got a few questions, and everyone in the audience will have some questions as well. Does that sound good?
Sounds good.
All right, awesome. So quick background on AQUAOSO and myself. I'll give you kind of the public version, and then I'll talk a bit about the private side of it, because there's always two sides to the story as well. So I've personally been working in the water sector for about 20 years. I started out working for a family business. My mom and my dad, we were in the real estate business. I worked with them all through high school and all into college. Graduated college, swore that I would never go back to the family business. And then, like all great college graduates that are broke, I went back to work for the family business. Ran it for a few years, ultimately sold it to a national home builder. But in the process, we had acquired a 70-acre piece of historical farmland. This farmland had water rights associated with it. And that was really my entry point into learning all about water. I built a water market, had one of the largest private water portfolios at the time. This was in northern Arizona. Did that for a few years, got to work with some really great development companies, with some public municipalities, got involved in a wastewater treatment plant development project. And I got married and we had a baby on the way. And as you know, you may or may not know, babies are really expensive. So my wife then convinced me to go get a real job with real health insurance and leave this startup entrepreneurial life, which I did. I moved to Phoenix. I spent about 5 years working with a consulting engineering firm, helping them build their operations on the back end. So marketing, sales, risk management, strategic planning, and they were focused in the water space as well, but for the municipal side of the business. So they were building pipes and treatment plants. Then I was recruited here to California. So I'm up in the Sacramento area, spent about 5 years working with another consulting engineering firm. This group was a little different. They were focused on deploying software solutions to water and wastewater utilities. I started to see some interesting trends in the utility space around leveraging data and how those organizations were having a hard time leveraging data. So I started my second company, which was really my third, but I'll get into that in a little bit. I started my second official company called the Water Innovation Project, which was focused on helping water utilities and software companies build the right solutions for water utilities versus just any random solution to help those utilities really solve problems. I did that for a couple of years, got recruited into a company called Fathom, spent about 3 years running around North America and Europe selling smart meter devices to water utilities as a VP of strategic accounts and client success. Learned all about what it takes to keep customers happy in a software business, which is very different than a product business, like a widget business, and very different than a consulting business as well. I then started seeing some really interesting trends here in California in 2016. The primary driver being SGMA, which I would suspect most of you on this call know something about, the Sustainable Groundwater Management Act, and the changes in the ways in which we were starting to manage groundwater in California. And I realized that there was an opportunity, just like in my past, to better leverage data, but rather than on the utility side, in the agricultural space, as agriculture is one of the largest users of water, and helping the agricultural space better leverage the data to make decisions. And I did that by starting AQUAOSO in December of 2016, really with a mission to build a water resilient future. Our original mission was to build a water trading marketplace. Increase the transparency of water rights, increase the transparency of transactions, increase the data around all of that, and help build this automated smart water market platform, which is, I think, where we were at when we entered the Wet Center and went through the first accelerator program with Ben and Jeff and the rest of the crew down there. And what we started to find as we launched software and had about 60 customers that weren't paying us was that it was going to be a business that we couldn't scale without becoming really a consulting brokerage kind of a firm. And so as we were thinking about ways in which we could leverage the data, the public story is that we had some conversations with banks. We heard what the banks were saying, how they were having a hard time understanding risk associated with their loans, especially in the age of SGMA. And the light bulb went off of, holy crap, what a great opportunity. Let's go build a water risk analytics platform with all of the data. And very magically, we became a water risk analytics platform. And we made that transition. And we've transitioned from, it took about 6 months to transition out of water rights into our current business model, which is software as a service. Like I said, we sell to banks. And we've gone from 0 customers to about 30 customers here in California in the last 18 months. $0 of revenue to about $500,000 of annual recurring revenue on the software side in that same period of time. So we've seen some really good growth. We bootstrapped the business all the way through what I would say the pivot when we found our first customers. We've raised less than $1 million to date. We went through the Techstars Sustainability Accelerator program last year in Denver, which was super cool. That was with the Nature Conservancy. And so I say all of that because this journey is one that we've taken not alone. We've had a lot of really great mentors along the way. We've had a lot of support along the way. We've very intentionally built community around us to support us on the journey. And I know that this session is really about how do you go find the first customers? How do we know that, we're on the right path? Because it's hard. But it's all interconnected, right? Like building a business and building a software company and working in the agricultural space, you can't really do as a lone wolf. It takes a community, and there's a lot of lessons that have already been learned by others. So we as a team at AQUAOSO have spent a lot of time learning from others and finding people that have already stubbed their toes, if you will, to figure out like, how do we go build a successful business? And we've done a lot of it very, very cash efficient, which is hard. Like, it would be great to have a ton more investor money and spend it on a bunch of experiments and figure out how we can grow faster. But at the same time, you know, someone the other day kind of referenced this idea of, you know, do you want to be an oak tree or do you want to be like a willow tree, right? Do you want to be something that grows really fast without deep roots that could potentially fall over in the wind? Or do you want to be something that might grow a little bit slower with deep roots that gets very strong over time? And I think this thing called COVID has kind of proven in the market that having a strong base in tough times is much more valuable than being something that grows really, really fast without figuring out where the footing really is. So just quickly, AQUAOSO, we've got 6 full-time employees, 1 part-time employee. We've got 3 contractors. So really, we're a team of 10 people. We work remotely. There's a few of us up here in Sacramento. We've got a couple people down in Fresno. And then we've got one of our developers actually back east. He's in Huntsville, Alabama. So we've been kind of accustomed to working remote. But so that's like the public story, right? That's the feel good, we're growing, we're doing the right things. But it's a shit ton of work. It's really hard. It's really painful. I've wanted to pull the plug probably 10 times in the last 10 days. That's a daily thing though, right? Like, you have really great days, you have really bad days. I joke about the last 10 days, maybe the last 10 months. Because it's just hard, right? It's exhausting. And I think the thing that gets me through it every day is knowing that I have this community that I can go back to, that's supportive. And then also going back to this idea of who the customers are, right? Because it's really the customers that have been driving our success. And so the hard part about finding those customers, if I think back to going through the accelerator with Ben and Grace and Jeff and the team, and we were thinking about how we were going to pivot, and we spun. If you could have seen my co-founder Cameron and I thinking about what we were going to do and how we were going to actually go build a business, I mean, we spun through probably 10 different scenarios of business building from probably November to January, as we were thinking about the business. And we went all the way from, well, let's just be a water brokerage, to let's go build the blockchain for the supply chain of food. I think I actually pitched that, like the blockchain for the supply chain of almonds, on the demo day that we like magically made up that morning. But secretly, kind of in the background, we've been having these discussions with banks. And what we found was we kept hearing the same pain points over and over again. We were hearing the same pain points about this idea of, I don't understand what's going on. And so we heard it enough times that for us was the really big lightning bolt, if you will. And we realized that, okay, people are having a hard time understanding this thing around risk and water. What can we do to solve that problem? And when we took a step back, we realized that we heard it from maybe 10 people, but 10 people is not a market, right? 10 people is an idea. And so we spent the next 6 months talking to people, like literally driving up and down the 5 and the 99 and having conversations with bankers, with farmers, with large growers, with small growers, with insurance companies, with potential competitors, with everyone that we could possibly talk to in the space, to really get a good feel for what is the problem? What is this thing that we really need to solve? And we heard it so many times that we finally realized that we could wrap our arms around it. And mind you, we hadn't raised any outside capital yet. We were still bootstrapping this. And I think the first lesson in all of this is you don't know who your real customers are until you get a commitment from someone. And, you know, it's really easy to maybe go get a commitment for an unpaid pilot with no expectation at the end. And I would say that unpaid pilots with no expectation at the end is not a good indicator of whether you have a customer or not. I think the real indicator of finding a customer is finding someone who's willing to pay you for your services, whether it's $1 or $10 or $100. Like, there's an exchange of value. And if you do a pilot, the exchange of value could potentially come at the end, which is, if we're successful, will you buy this product? And if the answer is maybe or no, then you might want to rethink whether or not you've got kind of a customer fit. Like the truest indicator really is finding a customer that's willing to say, yeah, I will buy that product if it solves this pain point for me. And if you hear that enough times and you get enough customers to do that, then you have a business that you can start building on. So we spent 6 months talking to customers, trying to find the people that would actually be willing to buy something from us. And the way we approached it was with PowerPoint presentations. We hadn't built any tech besides the water market. We mocked up a few things. And when you're in the software business like us, it's a lot easier to go do this than like in the hardware space. There's a different way to maybe go about it. But in the software space, what we did was we basically showed pictures of what we intended to go build to a number of folks. And when a dozen of them said, yes, I would be willing to pay for that if it was built, our next question was, great, will you pay us $800 to be a beta customer while we build it? And we got a dozen people to say yes. So that was our indicator that we should go build this, at least an MVP of it, and see then, get customer feedback as we built it. So that's exactly what we did. We leveraged, 12 customers at $800 a piece to fund the first MVP. We got through building that. We started to get commitments they would buy a commercial version of the product. We then raised some friends and family money. And we, like a lot of companies, went through the process of trying to raise money before we had customers and got the same rejections that everyone typically gets and had the same conversations internally, like, why don't they understand what we're trying to do? We're changing the world, damn it. But I've learned like, that's almost a negative reinforcement of trying to build a successful company. And I think it's good to go into the process of fundraising, knowing that, and thinking differently about how you raise money, which is another topic altogether, but I know that's probably on a lot of people's minds around, I need to go find the first customer so I can go raise the money so I can find the second customer. And I think my advice is don't ever bet on investors funding your business to get your first, second, or 10th customer. You need to figure out how to do that on your own. And it kind of sucks to hear that. And it's hard to do it, but that's part of the entrepreneurial journey, if you will. Finding customers, finding that traction will help you raise money in the longer term. That's not to say you can't raise money. Plenty of companies do. But I wouldn't set the expectation that you're going to raise money before you find your first, 5th, or 10th customer. So we built the MVP. We then commercialized it about 3 months later. So in August of 2018, I guess that was. And we then started selling it. And we started selling it by having conversations with customers. And this is what I mean when I talk about showing up. You have to do the work, right? You have to pick up the phone. You have to have 100 phone calls. You have to have 99 rejections. If you're super, super lucky, maybe you only get 50 rejections and 50 yeses. But set the expectation like mentally that you're going to get a ton of rejections before you get the yes. And I say that because it's a mind game, right? A lot of what we experience as we go find the first customers is a total mind game of how do I as an individual, and this is where it gets really personal, right? How do I as an individual survive all of the no's? How do I financially survive the time frame from 0 customers to 1 customer to 10 customers? How do I mentally get through all of this without completely losing my shit? And I think that's where community, again, becomes really important. Having a community of people that can help you understand and just reflect with you on how hard this really is. Because if you go into this with that mindset, like it's a lot easier to get through. Like, all right, it's a no, I expected that. Like, we're going to continue to get that. But finding those first 1, 5, and 10 customers is, I think, the real challenge. And there is a framework that you can use to go do that. And the framework is showing up. The framework is picking up the phone, having a conversation, learning from the conversation, iterating on your product potentially, and then showing up again, right? And that cycle will continue. Like, we're still going through it. I anticipate we will be going through that cycle into perpetuity until the end of days. It's like a never-ending cycle of learning from your customers, figuring out what they want, and helping them solve a problem. Not your idealized version of the problem, but the customer's actual problem. And when you show up for your customers, what we've learned at least is when we mess things up, we've built relationships already. And those relationships help you get through those times when you screw things up. Because you will screw things up. You will build the wrong piece of the product. The product will break. You will end up with a leak soup recipe as your terms of service on the commercial version of your product, which is what happened with us. And you'll get a phone call from an attorney saying, why is my customer A bank agreeing to a leak soup recipe as the terms of service, right? Like those things happen. And by building the relationships and showing up for your customers, you can actually get around a lot of those problems that you face super early on. And for us, like the customer feedback has really driven our growth. Having those conversations, really listening to what the customers are saying, and I think learning how to read between the lines of what the customers are saying, because sometimes customers don't know what they actually need. They'll tell you 10 different things. And if you get to the heart of those 10 different things, which might be one thing, you can solve a problem. So it really does take listening to your customers and empathizing with your customers to get to kind of building the right thing. So I've kind of gone around and around in a few different parts of the discussion. But that's kind of the AQUAOSO story to date. You know, we've got good, great paying customers. We've gone through our first 1.5 years of renewals. We've pretty much got 100% renewal rate with our customers. All of our customers are renewing at higher value contracts, all because we've listened to our customers along the way. And we've tried really, really, really hard to not chase the next shiny thing, but really focus on the core customer base, which in today's age, I'm really glad we did, because all of those shiny things have kind of faded, right? Like people have refocused on the most important things to them today. So maybe with that, I'll take a pause and Ben, ask you or anyone in the audience, like, you know, is there anything specific that you want me to get into around kind of finding those customers?
Well, here's what I'll do is I'll kick off with some questions. I had some key thoughts. In the audience, feel free to just chat in any questions, and then we'll see your name and we'll call on you to go off mute and ask your questions. So just start chatting those in. So Chris, first and foremost, you're sitting down with customers, you're talking. Now, between us, I think we could both agree that that conversation, it's not going to be as simple. What's your point? They tell you the pain point. You're like, great, let's just solve it. What's the skill set? What is your advice on asking the questions and getting the right answers where you're getting data and information that you can actually act on?
Yeah, I think that really is a critical skill. And what we always started with was, here's a pretty picture of what we're trying to build. Does that even make sense to you, customer XYZ? And that's where we start the conversation. Because then it usually turns into like, no, I have no idea what I would ever use that thing for. And you'd be like, great, what is your biggest problem, right? Like, I think the biggest questions to ask customers are actually pretty simple, which is, what is the biggest problem you're facing today in this particular area, right? My area of expertise is water. So obviously my questions were always centered around kind of this idea of water and Sigma and regulatory changes and groundwater pumping. And I didn't know if we were going to go build a water risk analytics platform. I didn't know if we were going to go build a widget to put on a well to measure how much was coming out of the well. I didn't know if we were going to go build a widget to put on the edge of the farm to, you know, identify if there was some runoff. You know, it was really the question of, what is your biggest problem? And then asking 5 questions into that question. So if the biggest problem is, yeah, my biggest problem is, for us, it was, I don't understand what's going on with Sigma. Okay, great. What does that mean to you? Like, what part of that don't you understand? And it's like, well, it's a really complicated regulation. Great. What part of the regulation is really hard to understand? Well, in the context of water districts and farms and all of this data, great. What about that is really hard? Well, it's hard to get the data. Great. We can help you solve that problem. So I think being able to, learning how to drill down into the questions that you're asking the potential customers without predisposition to what you think the answer should be, I think is a really important skill, because it's very easy to ask leading questions and hear what you want to hear, but it's not necessarily what you need to hear when you're having those conversations.
Excellent, Chris. Michael, I see you got a question. You want to take yourself off mute and ask?
Thank you. Yeah. Hello, I'm Michael Regg. I'm at Chico State University up here in Chico, Center for Entrepreneurship. And I was wondering if when you look at your customer base, do they all provide you with the same amount of profit? Or do you, and well, I guess when you go out looking for customers, are you looking for a specific type, that would, obviously be a better bang for your buck, so to speak?
Yeah, that's a really excellent question, which really gets to the heart of where you focus your time and attention. And do you go focus on a niche vertical? Do you go wide? Do you go broad? We took the approach of going very niche, very focused. And we spent really the first 18 months, and even now, our primary messaging and focus is agricultural lenders. There are other customers, right? There's other customers that we're willing to serve that are on our platform, but we don't aggressively chase them, right? We really focus our messaging and our value props on the agricultural lenders. We've tried to go broad a few times, and a few things happened. One, the messaging starts to get really diluted. When you're a team of 4 or 6 or 10, it's hard to serve everybody at once. So we decided instead to really go focus on, for us, agricultural lenders, and build the business with them. And if there were other customers kind of adjacent to that could use our technology, we'll certainly sell to them. But we found that our customer acquisition cost is a lot higher outside of that ag lender space. And there's a reason for that, right? We've got like 20% of the agricultural lenders in California now that use our technology, which means they're recommending us to their friends. And we don't have that same level of recognition really in the other spaces yet. And it takes time and it takes effort. And, we have agricultural investors that use our technology, and they look for different things than the banks. And so now all of a sudden you're building like 2 different kind of value propositions inside of the same technology, which takes headspace, it takes conversations, it's a lot of work. So our main driver is the lender side, although we are starting to branch out now because we have more bandwidth into some other areas. But I think early on, those first 10, 20 customers should be the same customer type. Like, it shouldn't be like, man, I don't know, it would have been really tough if our first 10 customers were one ag lender, one investor, one grower, one supply chain of food, one, insurance company, because you'd be trying to build something for all of them. And you just end up with this Frankenstein kind of a piece of technology, or so distracted that you don't build the right thing for one of them who can really get the value out of the tech. So, there are certainly cases like a Slack, right, or Excel or Word that can serve a very broad base. But most of us, and I would suspect most of the people on this call, are serving someone in the agricultural sector. And I would really encourage people to get really super focused on who is that one customer that we can just excel at, right? Who will just love us. And that was kind of one of our main propositions early on, was we want our first customer to be a customer 10 years from now. And so we've been all about how do we build lovability into our product so that our customers consistently give us a 9 or a 10. Like, a 5 NPS score, a net promoter score, is not okay with us, not okay with the team. And I think it's important to build the culture of the company around that as well, and be able to say across the team, like, no, we're not going to go do that right now because we have to focus on this one customer. If we go do that other thing for that other customer type, we're taking time and attention away from the core customers who really are the folks that are providing the value to us to build a company. So, long-winded answer to your question, Michael, but I do believe that our core customers are our most profitable customers, and our core customers, for AQUAOSO at least, unlock the doors to other customer types down the road, which is why we've been fanatical about our focus.
Thank you.
So let's keep the questions coming in if anyone in the audience has any. Chris, when it comes to the market segmentation here, one of the key themes I see is they go too broad, too narrow, and people have a lot of questions about that. Is there any thinking that you could attribute to us here as far as how to find your target market, how narrow you should go, how broad you should go, any factors that they should all have in common or shouldn't have in common, anything along those lines?
Yeah. So like just for perspective, we've come out of building the company from a bootstrapped mentality, which is very different than coming at it from a VC funded experiment across 20 different channels mentality. So that is the perspective I come from, which is start with a focused group. And we've also, because I think our experience is important to think about as I kind of put this in context. We've also come from the framework of our customers should support on day one what it is that we're building, right? Every customer should be profitable on day one. That doesn't mean necessarily that like they're going to pay all of the bills across the board on day one, but it means like the cost of goods sold associated with that one customer should be less than what we're charging the customer. And if it's not, then the economics are fundamentally upside down on day one, which is hard to get past. You need a shit ton of excess capital, right, from the VC side to turn that around in the long term. And I think for the ag space in particular, it's important to be able to build profitability kind of into the economics on day one. So I am a big proponent of being things very focused, very niche until you get some scale. So for us, our first 12 beta customers were actually a bit different. There were some lenders, there were some investors, there were some real estate folks. And as we were going through the beta phase, we realized that we could make the most progress with the bankers. And then we've fully switched gears to focus solely on those bankers. And we told the other customer types that that's what we were doing. And certainly we didn't want to exclude the other customers from using the tech. But by being able to be focused like that, you really can get deep. And I think that for us, it's very important to go deep in the vertical of risk analytics for lending, because that's our core value proposition. If we mess that up, then no one's going to buy the tech and nobody's going to buy us down the road. So I think it's more important to get the value proposition right at the beginning and deliver the value as fast as you can to the customer types and build on that value, which in our world at least has led us to be very, very focused on a single customer type in order to go do that. Because again, doing too many different types of customers is really, really tough, because there's just a lot of brain power that goes into what does it take to solve someone else's problem that might be in the same space that could use the same technology. Now, if you have something that applies generically to other customers, by all means, sell it to those other customers. But I would argue like the first 10, 20 customers should be pretty similar, if not the same type, because you can really leverage that scale to then jump to something else if you really want to or need to, or prove that like it's just a bad model and you got to go switch and pivot into a different customer type. But at least right? Like if you have a single customer type that provides you with value on day 1 and day 2 and day 10, there's not necessarily a reason that you have to move out of that customer type unless there's only 10 of them, right? Then that's a whole different story around market size.
No, excellent point.
Did that answer the question, Ben?
It definitely did. Definitely did. So Chris, when you were asking questions and they were hitting on pain points, just curious here, maybe I have my facts mixed up. Was there a pre-order process where they were so interested in what you could put together that they were almost ready to do a pre-order? Am I correct on that?
Yeah, you are. So all of the beta customers paid us before we ever built anything. Like it literally was a couple of PowerPoints, and then we wireframed it. And I think we spent maybe less than $2,000 doing all of that. And most of that time was spent on like the contractor to do the wireframes. But yeah, we went out and we got the commitments before we ever built anything. And I think that's really telling, right? If you can get someone to commit to what it is your idea is before ever building it, like that's a great place to be. Like the worst place to be is building something in silence for a year without ever talking to a customer and without ever getting a commitment that that customer would be even thinking about buying it. Like that's just, man, I wouldn't recommend that to anybody, right? That's an expensive proposition and a heartbreaking proposition. And you lose your chance of experimenting, right? Like you don't need a ton of cash to experiment. Experimenting is a conversation or two or 10, and getting those commitments. So we started the business with getting a commitment from customers to buy the product. And, you know, the first product was a beta version of the product that was functional, like they would be able to get derived value out of it. We then got commitments for a commercial version of that same platform, and we got people to pay us in advance of building it. And as we started to bolt more products on, like our model is go get the commitment from a customer to prepay us at a discount for a commercial version of a product that's not yet built. Like, we've idealized it, we've thought long and hard about it, we've gotten feedback on it, we know it will provide value, and then we go capitalize on that. But we haven't necessarily built it, right? Like, there's a lot of stuff you can do in the background without actually building the tech or building the products. And we did the same, you know, we started here in California. We came out of the Techstars program at the end of last year. In December, we started migrating into 5 other states, and we started our expansion efforts. And before we built anything, we went and sold our product 3 times in those other states. Right? We got commitments, we got checks in the bank that, like, you know, your contract will start when we deliver the product, but, you know, we're giving it to you at a discount because we want to get to those states, and you're going to be our first customer up there. Are you interested? And we had one customer say, yes, here's a $50,000 check. Thank you very much. Knowing that we wouldn't deliver anything for 6 months. So I think it's really important. If you can get customers to pay for stuff before it's built, that's a great model to fund the business as well, right? The caveat to that is don't get people to pay for something you know you can't deliver on, right? Because then you ruin the trust. So there's a bit of a balancing act there of you need to be committed to doing what you say you're going to go do, especially if you take money from someone in advance of the contract. You know, you got a little more leeway if you've got like a letter of intent to buy something. But still, if you don't deliver on your promise, especially early on, that's a big problem. As my mother-in-law would say, who's Vietnamese, we have big problem.
Okay, so let's kind of reflect where AQUAOSO has been. You've obviously sat down with the right customer segment. You've come in there. As far as I'm aware, you've captured. You're the market leader in that segment. Moving forward from here, so you've done well in this segment. And let me ask you, what are the effects when you become that market leader? Lenders start recognizing that AQUAOSO is the product for the risk. Everything along those lines. What happens once you have enough customers in your specific segment? That way, you know, audience can tell how that affects their business.
Yeah, when we got to about the 6th or 7th ag lender as a customer, we started seeing references, right? So I think it was our 8th or 9th customer actually came from a reference from another bank. The lender, she was super happy with what she was seeing. She was closing loans at half the time. She called up her friend and said, hey, you really need to go check out this AQUAOSO platform. We got a phone call, they made an introduction, and we closed the deal like 2 months later. So what we're finding is by having a really good, strong customer base, we start to get referenceable clients, which is really important. We have really good case studies from customers who are renewing their products. That goes a long way in terms of validating the product, right? And you know, for us, the first 10 customers really were kind of industry leading folks that were willing to take a chance on a new company and technology. And it's important to find those customers who truly believe in the vision that you're building towards. But it's also important to realize that not all of the customers are going to be like that, right? We hit customer 14 or 15, we started thinking like, man, this is getting a lot harder. This is getting way harder to sell the product. Like, the vision is no longer enough. They want to hear about ROI. They want to hear customer testimonials. They want to make sure they're not the first ones using it. So when you start getting customers that can reference you, it makes it easier to sell the next band of customers that aren't market leaders. Like, they don't want to take a risk. And remember, we're selling to like a highly regulated industry on the banking side. Like, their risk tolerance level is pretty low. So having those referenceable clients have been critical for us and our success, which is again why we've been just fanatically focused on lovability and listening to our customers. And I would posit that goes the same for just about every every type of customer in the supply chain of food.
Excellent. So now that you've done very well by your current and your first niche segment here, you're obviously getting referrals, you're growing. As a company, and from your perspective, what is the next phase and stage, and how should an entrepreneur think after they get to this point? Like, what comes next after that?
Yeah, and I think it's important to do that thinking early on, but it's also important to iterate on that thinking over time, right? So very early on, and I've got it floating around here somewhere, I've got this kind of network effect of, if we get banks, then we can get growers, and then we can get GSAs, and then we get water districts, and then we can get, and the list kind of goes on and on, like insurance companies, and the upstream, the supply chain of food, like the distributors and the wholesalers and the packers and the shippers, and we help them identify risk. And like, we identified all of that really on in our business model of how we were thinking of growth. But again, we stayed super focused on the lenders because for us, they were the key to unlocking, at least our thesis was, they were the key for unlocking all of those other markets. And I think it's important to go into this with kind of what is your thesis of the market and how you expand into it, but be willing to change. Our thesis has changed probably 20 times in the past, again, 20 days, especially with COVID, around how the market is expandable for us. But the core of the thesis is proven to be true, which is the ag lenders have helped us unlock the doors to other customer types, because we have trusted relationships, and those trusted relationships then expand into other areas. So even though we're starting to expand more aggressively into other customer types, our core focus and lovability is still on the ag lending side of the business. We're not losing sight of that. Like, we're not going to let them go and they kind of wither in the background. It's like they're still, when they call, they're our number one priority, because we're not fully at the point yet where we're big enough to fully go pivot another part of the organization into another stream of the market, which is why we chose to do geographic expansion with the same customer types versus going horizontal across 30 different customer types in California.
So I had two other questions I wanted to ask. One is, I'm going to backtrack a little bit here. When it comes, now look, I don't know all the background. I'm going to do my best estimate, but I know that in the stage of the accelerator and where you were at, you had a very focused drive of what you're going to do. You had a big mission to change the world, but it was tough, and you were facing an uphill battle at that point. Any advice you can have, because I'm sure there's a lot of emotions that went into the sunk cost of what you developed to that point, the sunk cost of time and energy you've invested. I guess when you got to kind of kill what you're currently working on and move forward, any advice on just to motivate someone to do that when it's time and necessary?
Yeah, I mean, look, we spent 18 months, right, doing that. I left a really great paying job as a VP in a software startup that was Series B funded, traveling around the world. I had some really great customers and friendships, and I left all of that to go do the startup thing and fund it myself. Like, that's just crazy. That's crazy talk. I was fortunate. My wife supported me, my mom supported me, my family supported me. My kids thought I was crazy, but they didn't know any better because, they were young teenagers at the time. But it was a huge emotional, a lot of emotion goes into building a business, right? I was a single founder at the time. I think when we were going through the WET program, I had just kind of made Cameron a co-founder in the company. So like, there was a lot of just personal love and passion in the business, and a lot of my own cash in the business. Because we spent cash on outside contractors to build the first version of our water marketplace. So it was hard. Like, it was really, really hard. But when we realized that it wasn't going to scale in any meaningful way, and that I think the bigger lesson for us was the market wasn't ready. Like, I still truly believe water markets will be a thing of the future. But I think those things are 5 years down the road before you can actually monetize it. It's not 10. Like, it's a long, long ways down the road. And rather than continuing to dump money and emotional energy into something that, like, we would barely maybe be able to survive and probably not be happy with, like, why continue pushing a boulder up the hill with a string, right? Like, it just didn't make sense anymore. And so I think that there's a lot of emotional fortitude, right, and grit that comes with making a change and making a pivot like we did. And like, I'd love to say I did it on my own, but again, I had a great support system, right? Like we had an advisory board and I talked them through it, and they listened to like 3 different pivots before we got to the one that we're at today. And they supported me through every single one of them. And like literally a couple of the pivots lasted 2 days, right? Like, let's go do this, write up the business plan, figure it out, and then like do some market due diligence. And you realize, shit, that's a horrible idea. Why was I even thinking about that? So I think it's important to spend the time thinking hard about what it is you're doing, but also being honest with yourself, and being honest with yourself by listening to the market. Like we would have continued building a water marketplace if we didn't listen to the market, right? Like if we just kept saying they're wrong, we're right, this is a thing, we're going to go do it, like we would have been broke, we would have been out of business a year and a half ago. Like it just, we would never have found customers that were willing to pay us. We wouldn't have found outside capital. Like my finances would have, it just would have been horrible, right? So I think thinking through the ramifications of decisions is really important. And that honesty is critical to understanding, and honesty with yourself, right? Like how long can you push yourself to go do some of this? And what you'll find is you can push yourself a really long time with a good support system. And you can push yourself even longer if you have market pool. And I think finding that market pool is the most critical piece of all of it, right? Like you can get kicked in the head 100 times with 100 no's, but as soon as that one customer says, yeah, that's super interesting, let's talk about it, like all of a sudden, it's like, yeah, that's a great day, right? It might take 50 days to get there, but once you do get there, and so I think it's important to remember those days and not wallow too much in the self-pity that comes with being an entrepreneur, because it's pretty easy to get stuck in shitty days of, this is hard, why am I doing it, wah, wah, wah. I usually give myself about 24 hours and then it's like, all right, get out of it, go move on, go talk to a customer, and continue pushing forward. And everyone's different, right? Like there's other ways to deal with the stress that comes with getting the no's and having to make the pivots. You know, pivots are hard. By no means are they an easy thing to do, because you're throwing your baby out, right? You're dismantling what you thought was true. You're starting over in many ways. You might have to find new team members. Like it's tough. It's emotionally tough. And I think the best way through it is to go through it, right? Just experience it for what it is, which is an experience. So the hardest times that I've had, I try to revert back to, this is hard, but I'm doing this as much for the experience of being an entrepreneur as I am making money and, you know, building generational wealth. And I'm doing this to build a team. So like having a vision and a mission that really speaks to your heart is important, because we made a pivot. Sure, we made a pivot out of water markets, but our mission has always been to go build a water resilient future. And that mission is the same. We haven't changed the mission. How we get there has changed for sure.
That was a good point. One of the other things, Chris, and maybe the last thing we can close on is I found your perspective on raising capital and finding the right investors and what fits. And I know this is a very broad subject. I don't mean to dump this on you at the end here, but any general advice on raising capital, not in how to get it, but in selecting the right investors and what's the right fit for your company? I've always thought that your train of thought there has done your company well. I think that you'd agree that not the traditional investor that most people would have recommended for you would have been the best fit for your stage and what you're looking to do.
Yeah, like it's friggin' hard, man. Like raising outside cash is as hard, if not harder, than like building a customer base. Like again, like you can get kicked in the head 1,000 times. You're gonna get 1,000 no's. You're gonna be told this is a horrible idea. Why it's not even an investable idea. So for us, you know, we went through the process and we learned all of the hard lessons about talking to traditional VCs who want $1 billion company so that they could fund their $2 billion, you know, fund. And so I think it's important first, and this actually really hit home going through the accelerator program, Ben, with you and the team, is like understand the motivations of the investors that you're talking to. Like if you think your market is maybe $100 million a year in revenue and you're talking to a fund that has $1 billion, yeah, my guess is it's probably not a good fit, right? Like they need to be able to return their fund a few times over. And so they're looking for those companies that can be unicorns. And honestly, I don't think I personally want to go build a unicorn. Like that's not part of my DNA. I don't like big corporate structures. Like I want to create generational wealth for sure. And, you know, if I can sell a company for 50 or $100 million, I don't know. I think that's generational wealth. I think that's a pretty good signal. So I think understanding what's important to you as an individual and what you really want is the first step in understanding how you want to pursue VC funds. There are definitely other ways, right, to raise money, friends and family for sure. There's angels in the area, right, in the Central Valley, in California, in other states that might be just as passionate as you are for the problem that you're trying to solve. Those are really great people to talk to. You know, for us, traditional VCs, like early on, were a horrible fit, right? Like we were trying to figure out what our market actually was. We couldn't articulate how large the market was. Like we botched that every single time. And we still like constantly are iterating on like, what is the market? How big is it? How big can it be? How do we go tackle it? All while focusing on day-to-day execution. The other thing I would say, like without traction, raising money is just hard, whether it's from friends, whether it's from family, whether it's from angels. Like if you can't prove that someone's willing to buy your shit, like don't talk to an investor, just save the time, save the heartache. Like the thing I've learned about raising money is it's a learn as you go experience. You can read as many books as you want and you can talk to others, and you should totally do that. But until you're in the midst of it and you spend 4 months in nothing but investor conversations and you ignore your company, which I did, you really learn like the ins and outs of investors and the discussions. And again, I think finding mentors to help you through that is really important. So what we learned, some of it was really hard learnings, was traditional VCs are not necessarily a good fit for us. VCs that understand agriculture, that understand water, that understand kind of climate risk is really good for us. So those are the kinds of folks that we talk to. But I also have this perspective of kind of like our team and kind of like our customers. We have this no assholes policy, right? Like we want to work with people that we can work with in the long term. And I think the same goes true for investors, because when you raise money from someone, they're going to be part of your life for a very long time. And if you have trouble getting along with them on day one, like when things get really tough, it's going to be really hard to get along with them as well. So I think finding investors that you personally like, especially if you're the founder or the CEO that has to interact with them on a daily, monthly, quarterly basis, is really important. I think it's also important to find investors who are aligned with kind of the DNA and the culture of the company. You know, we've focused really hard on our culture. We spend a lot of time talking about culture. We spend a lot of time building culture. And, you know, we're a public benefit corporation, which means that we've baked into the DNA of the company this public benefit component of, yes, we're going to go make money. Yes, we're investable, but we also know that we're going to do some good along the way. And when the first question out of an investor's mouth is, why are you a PBC? Like it's an instant red flag of maybe you're not the right investor for us. So I think it's good to think about what are the filters, what are the things that you're willing to walk away from? Because when someone's willing to write you a check for 50 or 100 grand and you don't like the person, like it's really hard to walk away from that if you don't have a framework for saying no. So if you think about that stuff early on, it's easier to say no. And we've said no to money. We've said no to money that like we don't like the investor, we don't like the thesis, we don't like that they're pushing us to sell in 4 years. Like those are all things that you just have to really think long and hard about. And it's different for everybody. Everyone has a different perspective on how to raise money. One kind of last thought on the financial raise, and this was something I learned from one of our mentors at Techstars, he'd gone public a couple times with some companies, super smart guy. He's like, you know, Chris, if you can get to the point where you're indifferent about the conversation and about what the number is, it makes it a lot easier to say yes or no. So if you're in a capital raise and you think your valuation is whatever, call it $2 million, if you're indifferent to anything above that, like it makes the conversation super simple, right? Of great, it's a $3 million, and then you can negotiate. But if it's anything less than that, you know, it becomes an easier way to walk away. If you become indifferent to, you know, like indifference doesn't mean you don't care, right? Indifference just means that you've become comfortable with, I'm going to raise money or I'm not. And if we don't raise money, this is plan B, but I'm going to spend all of my time and effort to go raise the capital. Because the other lesson I learned is it is a full-time job to go raise cash. It's not a part-time thing. It's not something you can do on the weekends. Like it is literally like a 90-hour-a-week job to go raise money. So if you don't have someone that can help you build the company while you're raising money, it's going to be really hard. It's going to be really tough, and you're going to do both things very poorly. So I don't know if that's helpful, but that's kind of my experience and some of the lessons that we've learned along the way, right? So like in summary for us, it's important to find investors that are aligned with our mission. It's important to find investors that we actually like, that we can go grab a beer with, that we can have a conversation with, that we know we can have tough conversations with, because things go bad and they will go bad. And so having a partner that can help you through that's really important. And then the other last element is finding an investor who can add value to the company beyond the cash, especially in an early stage, because like cash is cash and it's somewhat of a commodity. And I don't say that flippantly, right? It's hard to find it, but it is a commodity. So finding an investor that can help you at the stage of the company you're at is really important. You know, if you need tech expertise, find an investor who understands tech. If you need market expertise, find an investor who can help on the market side. If you need an investor to help open doors for certain customers, go find that kind of investor.
Excellent, Chris. That was a great way to end it. Well, Chris, I want to thank you for taking the time to speak with us today, and everyone for joining. Hopefully, I'm sure you took something away, and I'm glad to have you all here. So next week, we will be covering plugging in with the California Energy Commission, or the CEC. We'll have Eric Stokes of the CEC talking about the different resources, programming, funding that's available through the California Energy Commission. So don't want to miss that one. And we'll end it on that note. So thank you, everyone, again for being with us here today, and we'll see you next week.